All right. Well, good morning, everybody. Welcome to another monthly Allstate product training. This month, we have a new product that's rolling out. So at the end of this month, in 1 week, we are rolling out a final expense product. Finally, this thing, I feel like it's been in the works for years here. So coming soon, coming next week, we will have a final expense product finally rolling out to you guys. And so here's a training on it. It's a new product, so bear with me, bear with us. We're all kind of learning it together, but pretty easy product as well. So you guys should find good use for this in the marketplace. Okay, so we'll go over the final expense. I'll try to make this really simple for you guys. You know, that's kind of my big thing. I want to try to simplify for you guys so that when you're out there selling, you're not getting lost in the weeds in your head, right? And so that's what big thing that we want to do today. Just try to make this an easy product to understand so that it becomes an easy product to sell, right? So this is going to be a lump sum payout of the benefit amount that you choose for death, right? So death is going to trigger a lump sum payout, okay? That's the basics of this thing, okay? You can see right here, product launches on March 28th with the first enrollment of March 30th. So just think of it goes live at Easter, and then starting in April, you'll be good to go is really the way to do it, okay? It is built on a whole life insurance chassis, so that will add some fun features to it on the back end here. But the basis of this is you die, it pays out a benefit. And the intent is for those funds to be used for things like funeral expenses, cremation or burial. And then you can take it further than that too. And guys, think about what if the family member had some credit cards that still need to be paid off? What if they have a mortgage that needs to be paid for a couple months while everything's getting sorted out and we got to sell the house, right? So that type of stuff, that is the situation that this plan is going to come into play for us. It's going to be a lump sum payout triggered by death, okay? There are two plan options here, just two. We keep it kind of simple. There's a graded plan and a level plan. Based off of everything that I can tell reading this, you guys really want to do the level plan. Okay, the level plan is where we're going to be going for most of our clients, assuming they qualify for it. Okay, the level plan is going to be the better plan. It's going to have some available riders at no additional cost that just make the plan work a lot better, okay? The graded plan is going to be the plan for our people that won't qualify for the level plan, right? I won't call it guaranteed issue because it's not guaranteed issue. It's just easier health questionnaires for the graded plan. So it'll take higher risk pool of customers. So also in that, the graded plan can also be a little bit more expensive. So all around, level is going to be the one you want to write if your customer passes the health questionnaire. If they cannot pass the level health questionnaire, they're more high risk. That is at what point we would look at the graded plans. That's as simple as I can break that down for you guys, okay? You can choose benefit amounts from $2,500 all the way up to 50 grand, and it's literally $1,000 intervals from there. You can choose 17 grand, 18 grand, whatever it is, $1,000 intervals up from there, okay? And then you'll see those two optional riders, accidental death benefit and covered dependent. Those are those ones that I told you in level plan, no additional cost, they're just there, okay? So huge thing and huge benefits on the level plan because it just gives extra benefits to our customers. And we'll dive into what those are and what those look like in a couple slides here, okay? And that very last line is important there, okay? Premium is locked in for the life of the policy once the customer is approved. Oh, and the fine print, if any of you are wondering, like I was here on, it says it pays the lump sum at death or policy maturity. In the fine print, policy maturity is your customer's 120th birthday. So it's just paid out at death, okay? Just paid out at death. All right, let's dive a little bit into here. Okay, so on the graded plan, it only goes up to 25 grand, okay? Not up to 50, only 25 grand on the graded plan. And then it scales up if it's not an accidental death, okay? So you don't get 100% payout if this death is caused by like a critical illness or something, right? Not an accident or natural causes even, right? Then you'd only get 30% year one, 60% year two, okay? And then from there, you'd get the 100% payout. So this is the graded plan, not as great or strong of a plan as the level plan, but it will fit a need for some customers, okay? That is it on the graded plan. This is how basic the graded plan is, right? This is your graded plan of final expense. Up to $25,000, it'll pay out a lump sum if somebody died, okay? And if it's not for an accident, then you'd be year 3 and on for that 100% payout. Simple enough, okay? On the level plan we're going into right now, there's going to be a lot more slides here because there's a lot more to the level plan, which makes it a more appealing option, okay? So the level plan you can see goes up to $50,000 depending on age, and we'll give you a slide to show you that in a little bit. Accident, 100%. Non-accident, 100% day one. So there's a huge difference right off the bat, right? Now, let's jump into some of the riders or extra benefits here, okay? A big one, okay, this is on the level plan only. There's an accelerated death benefit. These are some of those fun things. Remember when you guys took your accident, your life and health license through the state, and they were asking you all these questions about accelerated death benefits and things like that? Here it is. Here it's coming into play for you guys on a plan. And so you guys, if your customer gets a terminal illness diagnosis, they can get 50% of the death benefit payout given to them early, okay? So that's just there on the level plan, okay? Only up to 20, so only up to if they got 40,000 as their benefit amount, okay? Can only be used once. Can only get terminal diagnoses once, okay? Then there's an accidental death benefit rider, where this rider, and again, no additional cost. Look at this. At the very front line, no additional cost on it. This is only on the level plan. If it's an accidental death, pays out double, okay? Cool. And when you're in the quoting platform, these riders are automatically selected when you do it. So, and there's no cost difference. I'm telling you, I ran the quote and checked it out. No cost difference. These are included in it. So cool. Why would my customer not have it? Why would we not use it, right? Cool. Here's another rider. There's a covered dependent rider. Now this one, sure or not, right? Depending if they have a dependent that they want to cover. And then this could open up the dependent to questionnaire or anything like that, right? Oh no, no health questions required. I lied. Look at my last bullet point down there. So this would be $5,000 lump sum benefit to a covered dependent, okay? You could either use a child or a grandchild for that. And I believe the age on that one is as young as 30 days old. And then you can convert it up to the age of 26, okay? Oh, when they convert it, the face amount would double after you become an adult. Cool. On the level plan, there's cash value that is also accruing, okay? Now, I apologize, I don't have a cash value chart where I'm saying, like, okay, 5 years in, this is where you should be at. I don't have one of those available, so I apologize. But there's a cash value that you can loan against as well. So on the level funded, as your customer is paying into it over the years, and let's say they've got $2,000 built up in cash value, and then something happens, their car breaks down or something, they could literally take a loan off against this to go help get their car taken care of, right? Because this has built up a cash value. So really fun feature as well in the level plan, okay? And then you can choose to have it repay the loan in the cash value as well. So as you're accruing that, you can miss a payment and have it take from there or anything like that, or have it set up partial payments. So there's a lot of different ways that we can use that cash accrual. This is kind of where you can get into some of the weeds with the customer. Don't go too crazy into this stuff. Keep it simple here. If it's a lump sum payout to pay for the funeral costs, there are some extra benefit levels to it, okay? If you do need to use a loan against it down the line, we can look at that. Just give me a call and we can look at what value is built up in it and go from there, right? That's kind of how you want to have that conversation. And then, so this is where you can make auto payments as well on the loan. So that's what the last two slides is essentially saying, is how you can take the funds out and use it towards the loan even, okay, or towards the policy. This next slide I love here. This is breaking down the graded and the level plan kind of in side by side, okay? And so you can see these three riders in the middle: accelerated death benefit, covered dependent, and accidental death rider right here, that are not included in the graded plan. And then the level plan also just 100% day one, right? And goes up to more money, all right? So just in general, better idea or better plan on the level plan. And as long as our customers qualify for it, that's the route we're going to want to go, okay? Now, this isn't an association, but in your head, think of it like an association. There are a couple extra benefits rolled into this plan, okay? Final expense funds, when you're getting into the Medicare age space or the senior market, there's a lot of these extra protections that are built in. And so one of them is identity theft protection. The other one is active and fit direct. But active and fit direct, they just have access for $28 a month to be able to get to all these things. So they still got to pay extra for that. It's just accessible on the account. Barton asked, does this accumulate interest like a whole life policy? That's exactly what this is. Barton is a whole life policy. And yes, 2 slides ago, that's what it was saying, is it does accumulate interest. Yes. Cool. All right, graded and level plan eligibility. Again, graded is going to be a lot more simple eligibility. Both of these don't have spousal coverage. This is for an individual, okay? Age 50 to 75. And then this is the level plan. Same thing, no spousal coverage, but you could add dependent children, 30 days, so 1 month old, up to the age of 17, and then they could stay on the plan up to 26, okay? The dependent children says health questionnaire required at time of application. See, it's I knew I read that somewhere. On the other slide, it didn't say that. So we'll clarify that one up for you guys. But yeah, I thought that would bring them into a questionnaire. Okay. Maybe it just means on the level funded plan in general, though. Here's on all of the plans so that your brain can kind of simplify this. Okay. There's overall plan eligibility that either of these plans has to have. So these are just in your head. The next group of slides I go over is going to be overall plan eligibility. That stuff, if your customers don't pass this, they can't get either of these plans, period, right? And then the next slides after that will determine, do we go graded or do we go level, okay? So height and weight are collected, okay? And guys, everything's got to be true on the application. We're going to make sure that they attest to the truth of everything on this application, right? General eligibility questionnaires, if they answer yes to any of these, they're ineligible, okay? Well, sorry, but it's then it's worded wrong. But so they have to have been illegally reside here more than 12 months, no felonies in the last 2 years, okay? Cancer, HIV or AIDS. Those are the big things, okay? Cancer, HIV, AIDS, felony, legally reside here. That's the general eligibility. Then there's one more general eligibility in 12 months. This is health. Wheelchair. Do they need assistance eating, bathing, any of those things, getting dressed? Are they bedridden? Do they use a CPAP? Kidney dialysis? Or have they been recommended for a testing or surgery that has not been completed? Right, that kind of catch-all. That's a 12-month. And then any of this laundry list here is just a knockout. Ever. This has ever been diagnosed. Alzheimer's, stroke, cystic fibrosis, coronary artery disease, right? Sickle cell, all that stuff. Knockout. If they pass those levels, those three, they could possibly get the graded or the level plan, okay? Here's some more health questionnaires. This is for the graded. So the graded plan, this is considered the easier health questionnaire for final expense, okay? In the last 12 months, alcohol, liver, diabetes, kidney, this is considered the easier passing test. So if they can pass this one additional question, they could get the graded level plan. Okay? If they want the level plan with those riders, there's a few more questions they need to pass. Okay? The first one, in the last 2 years, have they been diagnosed with PVD or AFib, Parkinson's, multiple sclerosis, lupus? Okay. That would get them preferred rates. And then this one is if this is a yes, they just don't qualify on anything under here, okay? Currently hospitalized, bedridden, cancer, diabetes, cystic fibrosis, muscular dystrophy, organ or bone marrow transplant, mental or nervous disorder, heart disorder, right? And then alcoholism. So that has to be something where you've kind of admitted you had a problem though and gone and seeked help. And then the middle bullet point there is HIV AIDS. That's kind of the knockout on everything. So those questionnaires to get the level plan. Big thing, I don't want to confuse you guys because I don't like how this was written. This slide before this one, so this one right here, this is to qualify for preferred rates on the level plan. So the level plan can actually get preferred rates. They don't need to pass this to get the level plan. They only need to pass this to get the level plan. This one is for preferred rates on the level plan. Okay, I just want to clarify that for you guys. And then, speaking of preferred rates, so on the level plan, if they pass those 2 questions and then have not used tobacco in the last 24 months, no nicotine, anything like that, right? Even gums, things like that, they would get preferred rates. Here's the states it's in right now. A lot of good states on there. A lot of states I know you guys do a lot of business in. So these are the states that you can currently find it in. Sucks to say this, but suicide is under limitations and exclusions within 2 years of the policy date. So if somebody's unstable mentally, we don't pay that as normal exclusion. The accidental death rider, right? Suicide doesn't count as accidental death. Infections, it kind of defines what those are. You can do online application. You guys, any of you who've written senior products know how that flow works. Pretty simple, pretty easy. Can enroll any day, starting any day. But remember, in your head, just think April 1st this goes live. It goes live a day or 2 before at the end of March here. But if you just put in your head April 1st, you guys can start writing this plan, see what it costs. Just so you can get cost in your head, somewhere between $50 to $100 a month would get you about up to $20,000 of this. It would get you $20,000 to coverage. And then just over $200 a month would get you up to the 50 grand of coverage. Okay, so just if you're trying to place price in your head, that was the quote I ran for like a 65-year-old. Okay. If you're unaware and you don't already have this bookmarked, please bookmark allstatehealth.com. Really, really good resource for you guys. On there, the big thing under agents and brokers, you can get our marketing material. So in a week, we'll have brochures and stuff on this plan. You can also, under agent tools and information, there's our YouTube channel. And so in a week, we'll also have a YouTube video on this. So if you guys need to check back on this product or get more information, okay? You can also click the existing customers to get claims forms or get information for your customers, okay? This website, I don't care to save as much because this gets sent to your customer when they sign up. This is for them where they can go make payments, print out their ID cards and everything like this, and it'll get mailed out to them in their packet when they enroll at myallstatehealthsolutions.com. Okay. So cool. That is our new final expense product. So exciting stuff. We in the training team have been waiting for this thing to be rolled out for like 3 years now. So any of you guys that have also been waiting, we're excited. We keep double checking back and they keep confirming it is still going live on the 28th here. So a week from now, we should have this ready to roll for you guys. So thank you for attending. If you have any questions, comments, concerns, you can hit us up. You can also send them in to ngahtraining@ngic.com. Other than that, guys, again, thank you for attending. We're excited to bring this final expense product to you guys, okay? And no, you can pay any form of payment that you would like, Kirk, if you didn't catch that. You can do routing, account number, or a card, but we definitely encourage routing and account number, okay? Thanks, guys.